What if the very engine of market speculation could be transformed into a source of stability and wealth for everyone? What if the riskiest corners of the financial world held the key to its most dependable asset? This isn't a fantasy. It's the story of a revolutionary idea born from the ashes of a spectacular failure, a journey to redefine what a stablecoin can be. The year 2022 left a deep scar on the crypto landscape. The catastrophic collapse of USDe, a so-called algorithmic stablecoin, vaporized billions of dollars and shattered the trust of an entire community. In the smoldering ruins of that disaster, a question echoed through the digital world. Could a truly crypto-native dollar exist? A currency pegged to the US dollar, yet completely independent of the traditional banking system and government bonds that tethered other stablecoins like USDT and USDC to the old world. From this question, a bold vision emerged. It was the genesis of USDe, a project that dared to dream of creating a synthetic dollar built not on promises, but on the very mechanics of the market itself. At its heart, USDe is a synthetic dollar, a marvel of financial engineering that operates on a completely different paradigm. Unlike its predecessors, which store physical dollars or government debt in a vault, USDe is backed by the lifeblood of the crypto economy, digital assets like Ethereum and Bitcoin. But simply holding volatile assets as collateral would be a recipe for another disaster. The true genius of USDe lies in how it tames that volatility. It's built on a sophisticated hedging strategy, a dance of perfect balance known as delta-neutral hedging. This is where USDe's journey truly diverges from everything that came before. Imagine a set of scales, perfectly balanced. This is the core principle of Athena, the protocol behind USDe. When a user deposits a crypto asset, let's say 1 Ethereum, to mint new USDe, the protocol simultaneously performs a seemingly counterintuitive action. It opens an equivalent short position for 1 Ethereum on a major centralized exchange using perpetual futures. This creates a state of equilibrium. If the price of Ethereum soars, the value of the deposited collateral increases. But that profit is perfectly offset by a corresponding loss in the short position. Conversely, if Ethereum's price plummets, the collateral loses value, but the short position gains, once again balancing the scales. Through this constant automated hedging, the total value of the asset portfolio backing USDe remains remarkably stable, ensuring that 1 USDe stays firmly pegged to $1 regardless of the wild price swings in the broader market. It's a mechanism that transforms market chaos into predictable stability. But this journey wasn't just about survival or achieving stability. The true breakthrough, the moment that transformed USDe from a clever concept into a financial powerhouse, was discovering how to turn this hedging mechanism from a cost center into a powerful engine of revenue. In traditional finance, hedging is an expense, a price you pay for insurance against risk. Athena, however, found a way to make the insurance pay you. This discovery lies in a unique feature of the crypto derivatives market, the funding rate. This funding rate is the goldmine that fuels USDe's entire ecosystem. In the perpetual futures market, when bullish sentiment is high, the majority of traders are long, betting that prices will go up. To maintain balance, these long position holders must pay a fee to those on the other side of the trade, the short sellers. Because Athena's strategy requires it to perpetually hold short positions to hedge its collateral, it becomes a constant, systematic recipient of these funding fees. In a bull market, when excitement and leverage are rampant, this stream of payments becomes a torrent. Athena had found a way to capture the raw, speculative energy of the market and convert it into a consistent cash flow. And this is where the journey comes full circle, delivering value back to the community. The vast majority of the revenue generated from these funding rates, combined with the additional yield earned from staking the underlying Ethereum collateral through protocols like Lido, is not hoarded by the protocol. Instead, it is distributed directly to the users who participate in the ecosystem by staking their USDe to receive SUSDe, or staked USDe. This masterstroke transforms USDe from a simple stablecoin into a high-yield savings instrument. It became known throughout the community as the Internet Bond, a decentralized, accessible financial product that generates a robust yield derived directly from the intrinsic mechanics of the crypto market itself. The market's response was nothing short of explosive. The concept of a stable asset that could generate double-digit yields was revolutionary, and it ignited a firestorm of adoption. What began as a bold experiment quickly snowballed into a financial juggernaut. The circulating supply of USDe began to climb, slowly at first, then with breathtaking speed, demonstrating a powerful vote of confidence from a market once burned by stablecoin failures. The journey from a post-UST concept to a multi-billion-dollar asset was underway. By September of 2025, the vision had become an undeniable reality. USDA's circulating supply had surged past an incredible $13 billion. This meteoric rise propelled it into the top ranks of the stablecoin hierarchy, making it the third largest on-chain stablecoin, standing shoulder to shoulder with the long-established giants USDT and USDC. But its success wasn't just measured in market cap. Its utility and integration spread like wildfire across the decentralized finance landscape. Major exchanges like Bybit embraced USDe, integrating it as a primary collateral asset, which dramatically increased its liquidity and usefulness for traders. At the same time, foundational DeFi protocols like AB and Curve welcomed USDe into their ecosystems, weaving it into the very fabric of on-chain lending, borrowing, and trading. This incredible growth is fueled by a beautifully designed feedback loop, a procyclical engine that thrives on market optimism. The more bullish the market becomes, the more traders are willing to pay high funding rates for leverage. The higher the funding rates, the more attractive the yield becomes for those staking USDe. This higher yield, in turn, drives more demand for minting new USDe, which further expands its supply and deepens its integration into the market. USDe essentially created a system that allows it to directly benefit from market sentiment, turning bullish fever into a productive force. It had successfully positioned itself as a decentralized yield generator, operating on the inherent perpetual demand for leverage that defines the crypto market. This is the bright spot, the heart of USDe's inspiring journey. It is a story of turning a crisis into an opportunity, of finding order in chaos. Created a mechanism that elegantly converts the cost paid by speculative traders for leverage into a steady, reliable cash flow for everyday users. It is a testament to the power of innovation, demonstrating how the market's most volatile excitement can be harnessed and transformed into a sustainable, on-chain yield for all. This is more than just a new stablecoin. It's a new financial primitive, a symbol of a more resilient and inventive decentralized future.